Hey, welcome back to The Dive. Today on the show, we're chatting with Gareth Soloway from InTheMoneyStocks.com. Gareth will give us his take on the yield curve starting to move upward, his read on Bitcoin, Ford, Tesla, and some of Canada's cannabis stocks, as well as some stocks to keep an eye on over the near term. But quickly, before we bring Gareth on, think about hitting that subscribe button for me, please. Hey Gareth, welcome back to The Dive. Happy New Year.
Happy New Year. Thanks for having me back.
Yeah, thank you so much for joining us. Okay, so Gareth, we've seen the yield curve start to move upwards. What's your read on the market's reaction to the Fed minutes?
The Federal Reserve definitely kind of threw a curveball the market wasn't expecting. So we knew that the tapering was coming and it started, probably concluding in March with all of the tapering being done, the 120 billion off the table. In addition, we knew that interest rates were likely going to go up in 2022. What we didn't know was that the Fed was going to take a more aggressive stance on their balance sheet, reducing their balance sheet. So I think that caught the markets a little off guard. We're now seeing the 10-year get right up underneath that 1.75% major pivot high. And the market is nervous, especially technology. Technology is what gets hit the most when yields go up. So it's certainly a little bit of a curveball from the Federal Reserve. We'll see if it lasts. I'm always skeptical, right? Because as soon as we see a hiccup in the markets, the Fed wants to come to the rescue. We'll see if that again happens.
Definitely. We'll wait and see. Okay, so what about Bitcoin? It's declined recently. What's your read on the chart here?
Yeah, so the chart on Bitcoin is so fascinating here, and I'll show my chart so we can kind of take a look. So what's amazing about Bitcoin is that for the last month, it was trading in this range here between basically 45,800 and 52,000. And we did see a breakdown yesterday. And again, notice that the breakdown in Bitcoin coincided with the breakdown in the stock market. So that again is something I've talked about prior, which is a deleveraging event where you get a hard sell-off in one asset class and it tends to bleed over into other assets. Now, the key is you can see this low from early December. That is your new support level on Bitcoin. Now, again, I've gone on record saying that I think Bitcoin has further downside to go. The biggest concern for me on Bitcoin is this chart right here, where you have the daily chart with a head and shoulders pattern. And again, the scary thing about this is if the neckline breaks, and it hasn't broken, it actually got tested in the last day or so. But if this level breaks right here, you have a potential move down to sub 20,000 on Bitcoin. Now, it's not going to happen in one straight line, right? So you're not going to see it in an overnight period crash down to 20 or sub 20,000. But I do think it starts the deleveraging that could continue, where we do see Bitcoin in 6 months to 12 months down maybe as low as 17,000. And again, I know that's shocking. I love Bitcoin long term, but there's too much fluff in the market at this point.
Yeah, it makes sense. Okay, so let's move on to Ford. Ford gained credit with investors after introducing the electric Ford F-150. What's your read on the traditional automakers as we enter the new year?
Yeah, so at least with the traditional automakers, they make more sense than something like a Tesla, which the valuation is kind of out of control even after its pullback recently. So if I look at a Ford or if I look at a GM, at least I can kind of justify being invested. I think that again, you're going to have so much competition overall over the next 5 or 10 years in the electric car industry. You see every major automobile producer, they're just rolling out endless amounts of electric cars. So I do think that the margins are going to get squeezed on these things. Just looking at Ford, and again, I'm a technical trader. One thing I'd like to draw your attention to on Ford here is that you did put in a topping tail yesterday on the chart. So again, in a very short term, and this is a very short snapshot, but this would be a bearish signal where you have a big pop early in the stock and it reverses and closes in the lower 25%. That's known as distribution. So you might get a pullback over the next couple of weeks in Ford. But again, longer term, I'd rather be in Ford and GM than I would in something like Tesla.
So about Tesla, with the interest rates seemingly on the rise and Cathie Wood's ARK ETF losing steam, do you think Tesla may have topped out in the near term?
I do. I do. So, I've gone on record saying that the valuation, I mean, everything, the reason why Tesla has gotten such a crazy valuation is number one, people love Elon Musk and he is a visionary. I understand that. But again, at some point, the value, the profits, there has to be some sort of metric that the market can figure out. And right now, you don't have that on Tesla. So again, I do think Tesla has topped out. I've been watching the chart very closely and we've been trading in a channel. So you can see here the two lines on the channel, the low end right here and the high end. And again, what I'd be careful of here as an investor is this lower channel line right here. If you extend it out, it's right around $860, $850. If price breaks that line, then you have significant downside to about $550, maybe even as low as 500 before it gains major support. So again, for me, it's a value. I think as we get into this new market where there's less Fed stimulus and it's more about earnings and dividends and quality, that's where you're going to see a lot of these names like Tesla really suffer. I mean, they've been amazing stocks to own, but at some point it has to reverse back to the kind of the high dividend, low PE ratio stocks.
Interesting. Okay, so let's move on here. A large portion of our audience is from Canada. And as you know, Canadians love their pot stocks. What's your read on the MSO's ETF?
Yeah, so again, I don't know. Let me see here. So the one of the ETFs that I follow is the MJ, and again, we can look at that chart. That chart's been absolutely demolished, just like other stocks out there. I've watched Canopy Growth. In fact, I have a position in Canopy Growth currently, and I actually am a big fan of the marijuana stocks, and I'll tell you why. So you're coming into an election year, right? It's not the presidential election year in the U.S., but it's the midterms. And if there's one thing I know about politicians is they like to talk up potential big points that can get voters that might be on the fence to vote. So I could see the Republicans talk about legalization on the federal level as well as the Democrats going into the November period. And when I see a chart that's been crushed like this on the MJ, or if we go up to Canopy Growth here, CGC, I mean, these stocks have been brutalized. And to me, that's where opportunity arises. So again, it doesn't mean it's not going to go down another 10 or 20%, but I'd rather take that risk when I know that there's 100 to 150% of upside. All you need is for chatter to start on legalization, and these stocks will rip higher. Again, from $8 on Canopy Growth, it could easily go back to $20, considering the high in 2021 was $55. So I really like this space. I think it makes sense going into the midterms, and at some point we know the government needs more revenue, right, for taxes. And one of the easy places to get it is going to be to federally legalize marijuana.
Yeah, it would be so nice. Okay, so one more thing before we let you go here, Gareth. Are there any other trade ideas you could share with our audience?
So it hasn't been a popular one, but I'm a true believer that number one, gold is going to outperform the S&P this year as well as Bitcoin. And I'm a huge long-term Bitcoin bull, but again, I do think that you have too much liquidity in the system. I think gold has been lagging. If you look at gold back in the 70s and 80s when inflation was at the ranges where it is now, it lagged early on and then had a massive move later in the cycle. So again, I'd look for gold to break out this year, so substantially above $2,000 an ounce. And I think, again, the S&P with the Fed kind of tapering and pulling back on the magical strings here is going to take the stock market down. The other thing I really like is looking at names like Alibaba, Baidu. These big growth Chinese stocks are trading at ridiculously low valuations, obviously because of the regulatory environment in China. But again, look at today's price action. Now that we've seen tax loss selling abate, stocks like Alibaba are having a big move today, up about 5%. Baidu's having a monster move here. And these stocks, if you look at where they were just in early 2021, they're massively down and trading at sub 20 PEs, while stocks like Apple and Microsoft are north of 30. So those are the stocks that I'm looking for. I'm looking for opportunities where there's value, even if I'm taking a little risk with the regulatory environment in China.
Amazing. Well, thank you so much for sharing all of your insights with us today, Gareth. It was so nice to talk to you again, and we'll see you in a few months.
Thank you so much. Have a great one.
Thank you so much for tuning in today. I'll see you next time, so don't forget to subscribe on your way out.